Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for gold, silver, and platinum being recorded on Monday, September the 22nd at 10 a.m. Pacific Daylight Time. First, my apologies for not getting this out over the weekend as I normally do. I did have some prior family commitments that I needed to attend to, but here we are, Monday morning, going to get this out. Starting here on gold, I'm on my maximum monthly chart. And just to kind of give that overview, that currently I am counting what's likely going to end up being a much larger if I leave it in a cycle degree one and two versus a cycle degree A and B. And the difference is as it's being delivered back to me is that an ABC denotes a corrective move. And that's true in equities and many other markets where a long-term count continues to build on a five-way sequence and building up to a grand supercycle degree, or coming off of a grand supercycle, then having supercycle, then having cycle. But when I was taught, when I learned Elliott, and we started to break it down using it within commodity markets, using it within other different markets that had different characteristics than the equity markets. It was shared with me that for the most part, in the commodity market, particularly in the precious metals, it was wise to not go much above a cycle degree, as most of those cycles consisted of an ABC structure. And whether that structure was a 535 or a 335, but they still just were consistently ABCs. But I changed it to 1, 2. But as I look at it and I think to myself, well, I think what that really does is it sets up a extremely large third wave. In other words, it's like right now I have some fibs that take us up to just above 5,000 in gold. Now, when I first was putting this count together, one would think it's like, wow, that's a little bit too high. But now that we've cracked above 3,700, and in fact, right now we're trading at 3,772, clearly on our way to 3,800 and likely above. So 4,000 was seemingly just out of reach, and now it's within reach. So I may change this back to a cycle B, still being a 5, 3, 5. As you can see, I have the 4 down there and then the 5. So here we are. Now, what I'm really more interested in is counting this 5-wave sequence that actually began off of the lows in 1999 at 253.20. And that's actually when I started publishing analysis, Elliott wave analysis on gold, was at that low. So I feel pretty comfortable in that completed a C wave, and what we're working on is a 5-wave sequence up, and it will form, I believe, likely an additional C wave. So, and then and this being the case, what we have is what's going to be within this cycle degree move. It's going to be primaries, 5 waves of primary degree, of which 1 and 2 are complete. And then in primary wave 3, only 1 and 2 are complete. So you're seeing it's subdivided once, twice, 3 times, 4 times, 5 times, just working its way upwards. And you can see within this third, let me bring this down, and we'll go to the 5-year. Within this third right here, it has been extremely dynamic in terms of the reach that the market has gotten from where it started. It's like even if we go from here where we're looking at the minute third wave, it began off the lows in 2023 at 1,823. And so that's when we started to accelerate. and we broke above 3,000, and we broke above 3,200, we broke above 3,300, and finally we broke above 3,500 before we did, well, basically it turned into a triangle pattern corrective move. Now, again, 1, 2, 1, 2, 1, 2. So where are we within all of this? Well, we're within the minuette fifth wave for to complete a minute third wave of a minor third wave. So now that's a pretty tall order, and it is a very not complicated, but extending, right? Count. So again, 1, 2, 1, 2, 1, 2. And I can bring it down one more time. I'm going to bring it down to my 3-year weekly chart. And again, the 1, 2, 1, 2. And we're now getting a little bit clarity here. So again, 1, 2, and we saw this third. Now I'm going to bring it down again, put it into the daily. And what I think I've gotten is a 1, 2, 3, and I'm going to put as much as maybe, maybe not, but I'm going to put that 4 into place right there, simply because we have exceeded that high by a fair amount. And this high was 37.44, and this high is 37.75, I think. 73, almost 74. So again, I just think it's exceeded. So I'm going to put this 4 here, which may be right, maybe needing one more little downswing to get in. But we reached, see, we reached that first level, that 0.236, which is why I left these on. So it reached that first level, shallow, but we reached that first level. So I'm going to remove that. And now what we have is we're going to add one more just to kind of give some clarity or position-wise where the fibs are going to come in for this sub-minuette fifth wave. So we're going to stick our color in there. We're going to go and do these because I don't want any red lines on the chart, and go back because this is to the upside. And so the first one that we really look at is, I think, yeah, 618, I think it's going to be, but I'm going to leave it there and put these like that and go like this. So our first one is that wave 5 will be equal to 0.618 of wave 1, and that comes into 3805. I'm going to call it a rounded up. But the most common is that wave 5 is equal to wave 1, and that's at 3896. So it's a nice jump, and it does kind of finish. But at the same time, once we get up there and we can complete this fifth wave, then it's also going to be completing minuette wave 5. And then one turn more, it is going to be completing minute wave 3. So we're getting to a point where I believe the market will be ready for a little bit larger of a pullback. So sticking with our Elliott, I'm going to bring this back down. If we get up to 3895 into that area, so anywhere from 3876 to 3900, let's say, then really what we're going to be looking for beyond that is for a pullback, right? So if this completes minute wave 3, then we're looking for a minute fourth wave. And as Elliott teaches and the guideline states, fourth wave in motion will find its terminus, its endpoint, within the fourth wave of one lesser degree, being that we would be counting a minute fourth wave. We're going to be looking towards the minuette fourth wave for where will that low come in. And right now I usually use the low at where the completion point for the previous fourth wave, and that is 3,300. So if we get up close to 39, we go and we're coming back down to 33. That's a 600-point drop in gold. That's fairly significant when even if you're in there every day, or even if you're swing trading gold. And it'll likely kick off with a couple of rounds of down 50, down $100 in a day or two. So I'm going to leave it at that. But the outcome from that, once we get minute wave 4 in there, and let's say it gets to there, then we're looking for a minute fifth wave up. One more time, going back out to this chart, we'd be looking for a minute fifth wave, get the 4 done, a fifth wave up. And then we're going to put that up to wherever that fourth wave is, and we will get some additional levels. So I can bring it out this way. I don't actually need to do that. I can put it on that 3-year weekly. And so these would all come off because they're associated with this wave here and this 5. And this one would come off. So what we really have to do is we'll reestablish on the minute degree on some levels coming back up. But just off the bat, we likely would be pushing above 4,000. Now that's saying we get to 39. We also have additional resistance for this wave at 4,043. So, and then we have some others in here for that minute that come in at 38.34, which I don't think will contain it. It might, but I'm going to be looking for a little bit more. And then we have 4.618. So the multiples get pretty large, and that's at 4,016. So lots of potential still, coming up. And that's once we get the minute third. And then again, the flip side of that is that once we get into that low, the push back up is going to be connected via this minute wave 1. And then we're going to be finishing minor wave 3. So you see that how this building block, so there's still quite a bit of, I believe, quite a bit of upside to come. And we cannot, yeah, that's what I want to get rid of all that and pull it down. We have fibs at 46. We have fibs up here at 53. And then we have ultimately, we have a high, or we have fib resistance at 55.36. So, and these are all a possibility, not, I mean, prior, when we're trying to work this from 1,000, that would be like, oh my God, that's so big. It's like, but now suddenly, this third wave has been so dynamic that it becomes within reach. So, let's go back down to the daily. So what are we looking at shorter term? We're looking for a completion of this sub-minuet wave 5, which will then complete the minuet wave 5, which will then complete the minute third wave. And then we begin a minute fourth wave correction, and the goal or the target would remain 3,300. And so we'll be counting that, and we'll also be keeping track of that. Moving averages right now are all still very much in alignment to go up. So the first thing we're going to be looking for as we're coming down is the 8 to cover the 20. But again, since we're not really looking for the 200 to be challenged, the daily 200, it'll start to go flat, and it should start to go flat pretty much right around where it is, 32.25. Even though we do have our internal support for the correction at 3,300. And so we'll have some additional levels in between once we get that high in. And we'll start putting some fibs just for the correction. Okay, that takes care of gold. I want to go over and take a look at silver, which also just in the last week has been really pushing higher. And so I need to kind of go by this one as well. Let's go to the 5-year weekly chart. You can see there's the B wave, and here we're having a C wave up. If I take this out one more to that maximum, you can see what we got going on is we have a W, there it is, W, and then we have an X, and this is a Y. So it's W, X, Y, and then we can go beyond that if the market warrants it. So in other words, it could be W, X, Y, X, Z. So there's a couple of more sections we can add. But in the meantime, yes, I believe we're in a Y, and you can see how that Y is forming. It's kind of inverse, right? Because normally we have a Y like that, and this is going in the opposite direction, but still a Y type of formation. And we pushed above 44. Now that to me is a major step in this rally that it got above 41. It held 41 as I initially was looking for, and it's held it twice. So we're getting up there and we're finishing these smaller waves. I'm going to go quickly down to that uh, 3-year weekly chart, and we can see this on the minor degree. 1, 2, 3, 4, and we're in that fifth wave. And again, it's not uncommon that it will be the fifth wave that ends up being the longest and the strongest out of 1, 3, and 5. Um, and so in this case, wave 3 is not the shortest. Wave 1 remains the shortest. So it all fits pretty cleanly on that basis. But more common in the precious metals is that it is that fifth wave that extends and then extends. And as you can see here, it's 1, 2, 3. So it's extending 3 times within this one was the internal, but even in that internal, it's the fifth wave that's extending. So as we come up here, we're into that fifth wave, and it could extend. Maybe we get up to 46 on this trade, on this in this particular move, and 46.96 to be exact. But here we'd have to go. We can go a couple of ways. We can I can put 2.618, and I also I'll just put it in there. We're just going to take a look. Where are we? 1 point, so it's 1.882 is what I want to also include and take a look at. So you can see we can get above 46, still within the context of the sub-minuette degree, putting in its fifth wave, which would then complete the minuette fifth wave and the minute third wave. So we have stronger possibilities today, seeing how easily the market has gotten above 44 and is holding above 45, 44. So its next target actually is right here at 44.50 approximately to 44.75. And then we have additional at 45.50 here. So that's a little bit larger of a zone, a resistance zone. And then we have 1.82 at 46.22. And then again, we have some additional fibs, but that's on intermediate degree basis, and that's coming in at 46, almost 47. We have continuation here on this degree. We can get 2.618, and that comes in at 48. And then we're running into the minor degree to where we find 49 and then 51. So again, you can see it's like we're getting up there. And I think as we start to approach and as we gain in momentum and gain in possibilities that the market can go beyond 50. So let's not forget that 1980, $50.50 to be exact, was that all-time high then. Then in 2011, it didn't get to 50, got to I think 49 and some change. Still a strong high in 2011. Now, 14 years later, we're doing it again. Different wave pattern with higher levels. And so, yes, the potential to move above 50 is there. It's real. And so we have to include, we have 50 to 55 and then 55 to 60. And I have heard from others that there's some analysis that is showing, the possibility for much higher levels above 60. I'm not going to go there right now because I don't have the fibs to support it. But it does exist. Now, getting back to our short term, what can we look forward to? Again, like in gold, I think what we're approaching is like we get done with this subminuette wave 5. That completes and also completes the minuette wave 5, and then it turns and completes that minute third wave. And so minute wave 3, we've already surpassed the 1.882. So what happens after that? We can go up a level, and we could put it here, and we can call this one 2.618 because that would be the next on that level. And you can see that's way up here. It's closer to 49. It's above 48. So I'm believing that it's going to come in here. So we've exceeded for this fifth wave, being 100% of wave one, that we've gone above because that was at 43.98. And now we're at 44.23. So we've succeeded that. Could this be finishing? Yeah, it could. Could be very quick. 1, 2, 3. Let me just bring this down. Let's put it on the hourly, and we can see inside here 4, and then we have 1, 2, and then we have 1, 2, 3. And so you can see 4, and then 3, 4, and this is a 5. And we'd have to connect this over to that to get up inside this. And I believe that it probably is going to come in around 44, 50, 45, 62, 46.29. See again, that's for that fifth wave. So gets a little bit empty in here, but we probably could fill some additional in. And then once I get that fifth wave in and the other fifth wave in, we'll be looking for the market to correct. Now, opening it back up to that daily, where can it correct back to? This fourth wave. So we're finishing a minute third. We're in a minute wave 4. We're looking for it to come back to the lows of the previous fourth wave of one lesser degree. And that's right there. And that low was 36.28. So again, we're not, so we get to 46, it's a $10 correction, which for silver would be on the large side. But in terms of what finishes here is that minute wave 4, which gives us a minute wave 5 up. So again, we're putting ourselves back into a fifth wave, large rally. And so could we get above 50 then? I think so. So I think we can definitely move to new all-time highs. Could we get up to 56? Well, sure. We can weigh probabilities once we do have some additional fibs that take us up there. Right now, I just showed you that we do have those levels all the way up. So I think that both markets are remaining healthy, but they're both becoming, between silver and gold, they're getting closer to where we should expect a little bit of a larger correction. Now, if you're really holding physical gold and you're doing it for the long term, you're not going to get too excited about the fact physical silver. You're not going to get too excited that the market might have a $10 correction because your eye is on that much higher level. And so, but I think just in trading wise, there should be some decent trading. And depending on where, if you're running along in silver, it would actually depend on what you have. SLV, huge ETF. And so that is options. And so there are a lot of options involved. And so we could see a lot of activity coming from that and just a lot of pressure on the market either direction as it all starts to settle out. So don't forget that options, I'm not going to say you will, but options have expiration dates. So they have a life cycle, so to speak, to where they expire. And when they expire, they disappear. And so here, we have to keep that in mind because I think sometimes when we get up to these expiration dates, particularly in the ETFs and in the futures market, the options can supply a lot of resistance and support during that particular expiration cycle and closer to the expiration date itself. Right now, though, I continue to look we're going to get up, we'll finish this minuette fifth wave and the minute third wave. We'll get a correction back down. Wherever this stops, I would still be looking for a correction back down towards the 36 area. And then another rally, because that'll be minute wave 3, minute wave 4, minute wave 5. And so wherever this ends up, we're going to be looking for minute wave 5 to go up and take it out, to go above it. And therefore, we do have those levels that take us. First of all, we have 3.618 at 44, 47. And that finishes this minute. We have this guy all the way up here. So we have the potential, 44, and then we have the potential for 48. So it's going to really, again, rely on where this fifth finishes, this fifth finishes, because that third goes with, whether it's here, here, or here. And a little bit longer term, here we have that minor fifth wave, which is where we're still going to look for, right? Because we have minute 3, minute 4, minute 5, then finishes, once it's done, it finishes the minor fifth wave. Then again, we're pushing into a larger minor 5. Then we go one more. Let's go out here. Nope, I got to go one more. So once we're done with the minor, we're looking for that intermediate. And that intermediate is a C wave. So again, what we've got going on is the ability to remember Y. It's a Y wave. So wave C will be completing that Y. And so that minor degree becomes more important, that once we get up to complete minor wave 5, then we're back out here and we're looking at this. We're looking at the C wave coming up. And that's where we have, for the C wave, we have 51, we have 46, we have 48. For the Y wave in itself, where wave Y would be equal to this section of the W wave, which is actually pretty much from its lows to its high. On this side, that projects to 50, 58. So we have them. We're just going to track them, and we'll see how this all continues to play out. So very similar to gold. Just to summarize, I am looking for a minute third and then a minute 4, and I think that minute wave 4 will bring us back towards this level. And so wherever we end up, I think it get back down here, and then we go back up and a minute wave 5 to complete this minor wave 5. All right, lastly, let's go over and take a look at platinum. In platinum, it's a little bit difficult, but I don't really have any changes to make. I still think that we run the stronger possibility that as gold and silver crest, put in their highs, and start to put in those fourth wave corrections, that we might finish this fourth wave, which I believe we're still within. We've not exceeded, first of all, we've not exceeded the top of the B wave, which is 1465. And if we were to do that with some power, then I would think, yep, we're likely going to go above 1511, which is the high for wave 3. And I would be more than likely going to have to put this wave 4 back over here, and not sure how this would count. So right now it still counts pretty cleanly as an A, a B, and we got a 1, 2, 3, 4, 5, likely going to come back towards 1200, 1220. So I think that could be an area where they find the support and it completes this minute wave C, and then that minor fifth wave, and then we're up and over again to complete this intermediate degree C wave. And those still remain the same, 1641, 1666. So yes, still upside left in the precious metals. And right now, even on this weekly chart, all the moving averages are still pretty strong, even the 200 period. And this is on the 3-year weekly. Even that 200 period moving average is now getting some slope, a stronger slope to it. And where the 50 is like definitely just kind of going, and the 20 is now cruising along with the market. And so that's where I'm going to complete this. And again, my apologies for not being able to get this out over the weekend, but I thought I'd do it Monday morning and get this all updated so that we can follow through the week. I will get back on my normal schedule. And so the next weekly update will be next weekend.